SG, but it's still Singapore. Like I said, Singapore is actually one of the better place for dividends. How do I actually sieve them out? I just want to do a very quick demo so that y'all can go home and practice. You're already home. Y'all can actually practice yourself. So what I do here is this. I go to sjax.com. Okay. Then securities, stock screener. Okay, hopefully by now all this you are very familiar with. There is a filter function. Okay, I go market cap more than 300 million. Because generally speaking, dividend stocks they have like bigger size, more stable. I go for dividend yield more than 3.5%. Okay, I go for P less than 20. Yeah. Okay, so this is how I actually sieve out the dividend stocks. Then of course I can rank according to market cap to see what the stocks that actually gave me higher dividend. So from here I have actually, so same thing, I will pass your this spreadsheet, but please remember my disclaimer. So these are the different dividend stocks that I have actually noted down. Okay, so since there's actually quite a number of them, so you can see that. So in fact, besides banks, you have actually Singapore, a lot of stocks give dividend. A lot of people think that only REITs and banks give dividend. No, that's not true. So down here you can see, of course, not all the 55 give steady dividends. So of course, when we talk about dividends, must be steady. Every year give. I cannot 1 year give, one don't give. But I think easily there are 30, 40 of them actually give quite regular dividends. Give quite regular dividends. So yeah, besides banks, besides REITs, some of these companies also give very good dividends. So let me share with you what will be inside my watch list. So since there is actually a lot for me to choose from, so I can afford to be a bit more stringent in my criteria. So what I did was this: I only look for stocks whereby P less than 20, you 4% and ROE 15%, return on equity 15%. So which I have actually done in the spreadsheet here. Okay, so you can see here. So there is 17 of them actually meet the criteria. Something meet the criteria. So how do I actually pick up this four? So of course, number one, I must like the business. I must like the business. So okay, like for example, things like Propnex. Sorry, I'm not really a fan of it. Bumi Tama. Okay, so this one is the oil palm plantation. Okay, I know that their dividend may not be so stable. Okay, so I actually got it. I didn't put inside. So and so forth. Okay, that's number one. I must like the business. Number two is, okay, I actually go and check their income over the past 5 years to see whether they have growth or not. So let's say, for example, Vicom. Okay, so I actually go to the financial statements. I look at their net profit after tax. Okay, to see whether are they experiencing growth. Like in this case, I can see past 5 years actually growing steadily. Correct. Let me just confirm. Yes. So can you see their income is actually growing steadily? Okay, sorry. Okay, net income after tax. Okay, increasing. So that is how I come up with this list. So there's four of them. So my favorite, this will be my favorite dividend SG dividend stocks. Okay, so number one, they meet this criteria: less than 20, U 4%, R 15%. I like the business, plus there is income growth. Like for example, Vicom. I think Vicom we did in-depth review last year. So you all know Vicom is actually into vehicle inspection. So that one very wun one, very stable. Okay. So even if we convert into EVs, okay, does EV need to be inspected? No? Anyone can help me here? Does EV need to be inspected? Yes, so in fact, even more things to inspect. So that's why, it's a very stable business. Every year, how many people need to inspect? It's about the same one. Then every year we'll go back to the same inspection. Every year the number of cars won't come down. Look at the price, COE price. So the number of cars will always be there. Okay. So that's one. So number two is this. Vicom actually going to position himself as like a testing company. So he don't really just inspect cars, he can also inspect, like, for example, I think he also doing like inspect, like, if I remember correctly, the what do you call that, insecticide. Okay, like for example, insecticide for agriculture, things like this. Okay, so it's a inspection company and no longer just on cars. So that's why, this company give you 4.2%. I believe it can continue, no problem. So, Ken, I hope I have given you some ideas. So there are other companies. Of course, you will also get this spreadsheet. Please remember my disclaimer. So these are the spreadsheet. This one actually, yeah, you know, uh, U more than 4P, less than 20, ROE more than 15. So this list, of course, you have to like the business. Maybe one by one, see whether like business. And okay, their income may not be growing steadily, but hey, there are choices for you. Okay, so this four. Okay, Hourglass is also actually quite interesting to me. So Hourglass has been giving very steady yield. And judging from, people still like Rolex. As long as people still like Rolexes, okay, the business will do well. So, and I think people still do. In fact, now the younger and younger ones are wearing Rolex. I realize last time Rolex is more like, of course, way back Rolex is more like old man watch. Now not true. Now the younger and younger people wear Rolexes already. Okay, then this one is market cap more than 1 billion. So again, you have another laundry list of stocks that give dividend yield. Sing Song, Netlink, Jardine CNC, FNN, okay, Hong Leong, so on and so forth. So you can get quite decent yield. Can you see about 5%? So not too bad. Not too bad. Also, again, why I chose this list is more of because I like the business and their income is going up. Okay, income is going up. Okay, so if you talk about market cap more than 1 billion, can you see there's actually quite a number of stocks that actually pass the criteria. How can enough? No, I can. Enough stocks. So not just banks and REITs, so still got other for dividend. Okay, now talk about banks. So there is a question of banks. So how banks now can buy, must sell or not? So number one, the price actually did go up. You can see the price actually did go up. So the question here is this, are the banks too expensive now? Okay, so what I did was this, I actually go and look at the valuation numbers for DBS over the past 5 years, as you can see. Okay, I look at the DBS past 5 year numbers. Then their PB is about range of between 1 to 1.4, as you can see. Their PE is about 7.7 to 11, and their U is about 4.4 to 6.6. Spot for choice, can aim patek. Thanks, Ken. Okay, so you can see this is the historical DBS numbers. So by the way, how I generate all these numbers, I probably won't give you all the raw, but maybe I just show you very quickly. So I actually go and download the daily price of DBS over these few years. Then after that, I actually copied. This is copied. Copied from the annual report. What's their EPS? What's their NAV? What's their dividend? So that I can able to calculate this. Then of course I compare with the most recent one. Currently DBS, the PB 1.9, PE is 11.8, and the U is 4.6. So basically, if you ask me, are the banks cheap? Definitely not. Are they very expensive? If you ask me, not really lah. okay, I don't think they're overvalued. Yeah, lah, the PB is a bit high for DBS. But if you look at the PE, it's not like, wow, a lot, a lot higher. No, lah, not really, lah. Slightly high, yes, lah. And you look at the U, 4.6, so it's actually still quite okay. There are years whereby, the U has been lower. So I don't think it's a case of the banks are like overvalued already. Okay, maybe fair value. Now they are trading at fair value lah. I would say that they're definitely not undervalued, but at fair value. Okay, especially if you compare UOB and OCBC. Okay, so of course, okay, not that I'm too lazy to calculate this for UOB, but I did. Okay, so by the way, like for example, usually over the years, DBS will have the highest PB, will the highest PE, and may not have the highest U lah. So I just want to have a comparison to see whether is it really too high. So you can see that UOB in fact based on PB actually still okay, or if you actually compare with the historical DBS, actually still okay. PE is actually still okay, quite okay. The U definitely quite okay. So in that sense, it's not a situation whereby it's overvalued. Like for example, PE 15, 16 times. Or then I said, yeah, it's overvalued. Or the dividend yield less than 4%. Then maybe I think it's overvalued. So in that sense, okay, so not to worry, later I'll give you my definite opinion whether I'll buy or sell. So I just want to collect some background information. I explain some background information first. Now, if you actually break down to DBS segment numbers, so where did the income growth come from? So of course, one of the reason why the price go up is because the income went up. Income went up. So if you actually look at it closely, I actually break it down in terms of country. So you can see that basically, maybe someone try to help me here. Which country is actually bringing DBS the highest increase in income? I already give the answer here from Singapore. Jay, I mentioned here. Okay, so you can see that it's actually from Singapore. Can you see? So this is 2023, this is 2024. So Hong Kong, okay, increase a bit. Okay, China increase, actually not too bad. Southeast Asia a bit, rest of the world just a bit. But the main come from where? From Singapore, as you can see. Okay, the main thing actually came from Singapore. So my point here is this, it's not like okay, it's not like DBS has a branch into a new area that increase the earnings. Or it's not like DBS have done something different. It's just so happened that our Singapore economy has been doing well over the past 1 year. So that's why the banks actually benefited. And if you actually look at it closely, the net fee and commission actually went up in terms of percentage, went up the most. Okay, you can see interest income probably up by only about 4-5%. Whereas the net fee commission went up the most, 18%. Anybody want to make a guess? How is the fee generated from what service? Okay, wealth management, correct. That means I think now there's more rich people in Singapore. Okay, there's actually more rich people in Singapore. Okay, thanks for the question. I'll look with them very soon. So basically, my point here is this, is like their earnings grow. It's not that they have done anything extra, it's just that the business environment in Singapore has improved. The economy has done well. There are more rich people coming to Singapore, which of course may not be may not be due to any of their efforts. It's just that the environment they are operating in has been better. Okay. So the question is, why buy bank? So depend on your views on SG economy. So of course, if you think that Singapore economy will continue to do well, will continue to have economic growth, will continue to have more rich people coming in, I think the banks can continue to go up. But my personal view is I don't expect significant growth in next 1 to 2 years. And I believe the upside for bank stock is limited. This is my personal view. Why I have this view is because I think there is a limit. Okay, because if you talk about wealth management, you talk about growth. Actually, a lot is still foreign. Um, or significant part is dependent on the foreigners coming in. And I think there's a limit to how much they can come. Okay, so I personally feel that you know we won't be expecting any significant growth, especially given the current geopolitical situation. US and China, okay, it seems that you know the conflict may escalate. Globally speaking, the economy don't seems to be be very bright. So I will tend to be on the cautious side. Then of course, if global economy don't do well, Singapore economy I don't think will do well. So in that sense, my point is this: you may want to buy currently still on buy if you view that SG economy will continue to do well. Or personally, I don't, so I won't be buying lah. So I'm also in the opinion that now it's fair. It's not undervalued. Okay, there's actually quite high risk you buy now. Oh, okay, but on this note, if let's say, for example, our economy remains stagnant, okay, I don't think it will crash. So crash means what? We'll go back to below $30. Now it's about 45, right? Okay, I don't think that, if let's say economy don't do well, you will one day go back pump to below 30. I don't think so. Okay, it may correct. Okay, maybe hover around $40 or in fact, or slightly lesser, but it won't crash. Why? Because it's not overvalued. Okay. So generally speaking, stocks will crash only when it's overvalued. Or like for example, Nvidia was suddenly there's a drop. You look at the PE. The PE, I think it was at 50, 60 times. So of course, anything happen when it come down very fast. Okay, whereas now the bank's PE are still talking about 11 times, actually still quite okay. So if let's say economy don't do so well suddenly, you will correct. Oh, now, it makes sense to buy for dividends. Personally, again, if let's say, it's to me everything is relative. There are still other things for me to buy that is undervalued, give me similar or in fact higher dividends. So why would I want to choose banks or it? If I buy REITs today, I still can get 6, 7, 8%. If I buy some of the stocks, also can get 5, 6%. So why I want to take this risk? Okay, so basically, banks, no, I won't be buying. So if you want to buy, you must be bullish on SG economy. That's what I'm saying here. Oh, okay. So this is a conclusion. Buying only if you are bullish about SG economy. So then the next question is, should I sell now or not? So banks, for my own personal, banks belong to my dividend portfolio whereby I hold for long term. And I'm not so bothered about price fluctuation. Now it's 45, drop to, 38, 39. It doesn't matter. Okay, I don't really bother me so much. So, um, uh uh yeah, so as long as I can give me dividends, I'm actually happy lah. So the only reason I will sell, if let's say for example, number one, I need the money. Sometimes I do need the money from stock market. Okay, there are periods in my career whereby my income not so stable, like during COVID. So yes, I have to sell stock sometimes. So thank you so much for all your support. Luckily you all joined the investment gathering. Okay, if not I got no money already. Okay, they have to sell stocks. So sometimes I do sell stocks. Okay. Or I believe the capability to deliver the dividends have changed. So let's say, the banks, the income is going to drop drastically, or they are not going to give dividend, which I don't think so. Okay, I think the banks still okay. It's just a matter of a bit more, a bit less. Okay. Um, I will sell only if they are overvalued. Okay, which again I don't think so. Okay, if let's say the dividend yield drop to below 4%, maybe then I will consider selling. Okay, but now I don't think they're overvalued, I won't sell. Okay. Or I sell only if let's say there's a change in portfolio structure. Let's say for whatever reasons, okay, now I am 70% dividend, 30% growth. For whatever reason, I want to switch to 50-50, for example, then maybe I will consider selling the banks. If not, I don't sell. So for me, I'm not going to buy. I still hold the stocks. I'm not going to sell. Okay, so hopefully this have given you some guidance. Okay, this give you some guidance. Should you buy? Should you sell? If you want to buy, you should only buy if you are very bullish about SG economy. To each his own. So I don't know. So I am not as bullish. But if you think you're bullish, sure, maybe you still can buy. Maybe DBS you can go a bit more. Okay. And if you want to sell, okay, these are the guiding principle. Whether you need the money, whether do you think that they can continue give dividends, whether do you think of overvalue, or are you changing over structure? Also, these are some guiding principle, or maybe just this question: if you sell already, this money, is there a better place to put in? If the answer is no, then just keep it. Can hopefully I answer your question on banks. Feel free to ask more questions. So let me just answer some questions. What do you think of Hong Leong Finance? I do like the bank. Yeah, it's always if I'm not wrong, let's check the PB. If I'm not wrong, the PB is actually still below one. Let's see. Hong Leong Finance. Okay, let me see. The income, if I am not wrong, is increasing also. Net income after tax. Okay, going up. Okay lah. So that's one came down, but actually going up. Coming up compared to just last year, it actually went up. Then if you look at the price to book value, price to book still below one. It's actually a bank below one. Dividend yield 5.3%. Okay, what? Or 5%. I'm okay. I quite like it. Okay, how do we add in the special division? Share buyback, the one will be giving out in the next offset with additional corporate. Oh, okay. So to me, I generally speaking, if you want to calculate dividend yield, right, we don't include all this additional dividend capital distribution. Okay, we don't include them if you want to compare the dividend over the years. Okay, if global growth not strong, would it affect REITs more than a bank? I don't think so. Okay, I think REITs is still very localized. Very localized. So you just think about it, like for example, if let's say for example, Raffles City, the economy don't do well, the shops are still there, people are still paying rental. But if let's say the economy of Singapore don't do well, we have all the rich men leaving Singapore, for example, then you'll be affected. Okay, in Yahoo Finance, there's a trailing 12 months and forward dividend yield. Which one should you? I actually look more on trailing 12 months. Okay, this one is the TTM one, trailing 12 months. Which is actually not a lot different. So forward dividend, there is an element of a projection. So I actually use the trailing 12 months one. Okay, but it's an individual preference. But if they are, okay, so for N, based on what happened during COVID, in fact, the logistics space are the one that done the best, was being least affected by COVID. Okay, so again, I don't agree with your statement. Okay, yeah. So the logistic REITs have been doing very well during COVID period. Okay, so for Charles, how to get data interest cover ratio for particular does SGX stock screener show? Unfortunately, they don't. Yeah, so now SGX stock screener, they actually changed. They actually took it out. So if you want, have to calculate a bit. But the good thing is usually they will pass. Usually they will pass. If you're in doubt, then no choice. I have to go and download the annual report and actually have to self-calculate.